As a high income earner, you work hard for your money. But are you keeping as much of it as you would like in your pocket? In this video, I will show you how to take control of your taxes and keep more of your hard-earned income. We'll cover key strategies for tax planning for high-income earners, including understanding tax brackets and marginal tax rates, taking advantage of tax-deferred retirement plans, investing in tax-free municipal bonds, and working with a tax strategist to develop a tax efficiency strategy. And if you stay until the end, I will give you my #1 way to not overpay taxes. Now let's get after it. Understanding tax brackets and marginal tax rates for high income earners is a lot. But here's the thing. Once you understand how it works, it is essential for informed financial planning, and it allows individuals to accurately estimate their tax liabilities. Tax brackets divide income into segments, with each segment taxed at a specific rate, ensuring that taxpayers understand their obligations at different income levels. A progressive tax system like we have here in the United States taxes high income earners at the highest rate compared to low income earners. This system is aimed to promote income equality and redistribute wealth by requiring the wealthiest taxpayers to contribute a large share of their income to public services and infrastructure. That's why it's so important to understand what you need to be doing. Marginal tax rates refer to the rate applied to an individual's highest income bracket. These rates affect a taxpayer's overall liability, as each additional dollar earned is taxed at the marginal rate for that bracket rather than the average tax rate across all income. Tax advantage of tax-deferred retirement plans. Tax-deferred retirement plans such as 401ks, 403bs, IRAs allow individuals to save for retirement while deferring taxes on contributions and earnings until withdrawal. These plans are necessary when you are in a high income bracket, and they are designed to encourage long-term saving and investment for retirement. Contributing to tax-deferred retirement plans offers numerous benefits, including tax deductions on contributions that are tax-deferred growth, and the power of compound interest, interest on top of interest, which can significantly increase your overall retirement savings over time. Contribution limits and income thresholds for tax-deferred retirement plans vary depending on an individual's income level. These limits help regulate the amount that you can contribute to these plans, and actually, their tax benefits are distributed fairly among taxpayers. Again, it's making sure that wealthy people don't get an advantage over people that don't make as much money. That's why tax planning is important. Consider investing in tax-free municipal bonds or muni bonds. Muni bonds are debt securities issued by local governments to finance public projects. Their tax-exempt status means that the interest earned on these investments is not subject to federal income tax, and in some cases, state and local taxes. And typically, the interest rates on muni bonds are higher. High income earners may find tax-free muni bonds particularly advantageous, as they provide a source of free tax income, helping reduce your overall tax liability and enhancement after your tax return. When investing in municipal bonds, it's crucial to consider factors such as risk and return. Now, I can honestly tell you, I've never seen municipal bonds go bad, and I've been in this industry for a very long time. A lot of my wealthier clients invest in muni bonds because they give you great interest and great ability not to pay tax. And while these bonds are generally considered low risk, investment advisors always say evaluate the credit of anybody that is issuing these particular bonds. And remember, the interest rates can fluctuate, and there can be potential capital gains or losses in the event that you sell. Work with a tax professional to develop a tax efficiency strategy. Seeking guidance from tax professionals is so important.
Please guide.
And you want to make sure you're seeking guidance from a tax professional that understands strategy for high net worth individuals. It's a completely different ball game. You want to make sure that you stay in compliance with tax laws and you optimize tax saving strategies. And these individuals have to have the expertise to deal with complexities of the tax system. Tax professionals can develop literally a tax efficient strategy that's in alignment with your financial goals, that's in alignment with your financial advisor, and help you minimize your overall tax liability and maximize your deduction and maximize your credits. They can also provide guidance on the tax implications of various types of investments. They can provide guidance on tax implications of making sure your kids' college get paid for, making sure they understand your real estate strategy, making sure they understand the strategy for perhaps taking care of your aging parents. It's mission critical that when you are a high net worth individual, that you understand you're paying at the highest rate possible, and choosing a professional who understands your specific needs and circumstances can provide you endless advice and guidance. And I told you that I would give you my number one strategy for making sure that you reduce your tax bill. And my number one strategy for making sure you reduce your tax bill is to tax plan all year long. Taxes are like a final exam. When you file your tax return on April 15th, that is going to be the test. That means that when you roll out of tax season, April 15th, May 1st, you need to start your tax planning, and your tax planning needs to go all the way through December 31st. And you may be thinking, Carla, what is there to do? There's a lot to do. You need to be talking to somebody about your unique situation. They need to know about your goals and objectives. Tax planning is not just about the numbers. Tax planning is about your goals, what it is you want to accomplish. It's about your family. It's about your kids. It's about your parents. It's about your retirement, your investments, your wealth, your business. It is about a whole lot of things. And when you take the time to plan, just like when you take the time to study for an exam, chances are you're going to get a better grade. So if you take the time to plan, chances are you're going to get a lower tax liability. So if you're asking yourself why your taxes are high, it is probably because you're not tax planning. But now that you know better, you absolutely have to do better. You have to start your tax planning right now. And when you do, you will find a lower tax bill. You also need to like, comment, and subscribe so I can keep you updated on all things tax.